Hi there, I'm champion trader Kevin Davey, and you want to algo trade? Well, here's the definitive guide to algo trading for beginners. So let's get started. If you haven't signed up for my free algo strategy, now's the time to do so. Hit the QR code or enter the link you see at the bottom, or in the description, you'll find a link. Sign up, you'll get this free algo and lots of other great information. Today's agenda, I'm going to talk about who am I and why you should listen to me, just to get things on the right foot. Then I'll tell you about algo trading, give you a simple definition, something simple to kind of remember what algo trading is. We'll talk about the advantages and the disadvantages of algo trading, because there are a lot of disadvantages. We'll talk about the skills you need. We'll talk some helpful tips to kind of get you started. I'll go through a sample algo, and then I'll tell you what to do for your next steps if you're still with it. So if you want to jump to any of these particular topics, just look in the description for the video and it will give you the timestamp to jump to, and you can skip over parts that you might already know, but this is really for somebody who doesn't know much, if anything, about algorithmic trading except the term, hey, trading algos, I algo trade. Well, we're going to get from the beginning to where you are almost going to be like a intermediate type algo trader by the time you're done with this, with the amount of knowledge. It's a long video, but stick with me, it's well worth it. First, our disclaimer, this is all education, so please remember that with anything you see here. Past performance is not indicative of future results. Treat all results as hypothetical, and most importantly, if you try algo trading, don't trade with money that you can't afford to lose. You should only trade risk capital. So keep that in mind. Everything I give you is just for educational purposes only. So, who am I? Who is Kevin Davey? Well, first of all, I've won some trading contests. I finished in first or second place 3 years in a row in a real money year-long trading contest. Each of those years was over 100% return. So I have some background of successful trading. I've also written 5 books on trading. Most of those are about algo trading, including my first one, Building Winning Algorithmic Trading Systems. All those books at one time have been bestsellers on Amazon. So I've written quite a bit about algo trading. And then lastly, I teach a course in algo trading, and the last 2 years, 2024 and 2025, it was voted best trading school by 20,000 readers of Stocks and Commodities magazine. And that's my latest award. You can go to traders.com if you're interested in subscribing to this magazine, but it's the premier trading magazine out there. And I was fortunate enough and blessed enough to be honored as the best trading school by that magazine and the voters of that voters and subscribers. Okay, so that's enough about me. What about algo trading? What is algo trading? Okay. The tricky part is most people hear the word algo and they get scared. Even if they've been trading for a while, they get all these images of just scary things with algos. And truth be told, there are some good reasons to have that fear of algo trading. If you see things, headlines out there, there's all sorts of bad things going on where algos run amok and just go crazy, and companies lose lots of money, and The fear that most people have at a retail level is they set up their algo and then it just starts buying and buying and buying, and all of a sudden then they're out of money. So those kind of things can happen, and there are good reasons for that fear of algo trading. But when you do it right and you set things up correctly, you're really not going to have those kind of issues. So most of these issues and most of the reason for fear is when things are done incorrectly. So you really have to learn how to do things correctly. And speaking of the fear and doing things correctly, most people assume that algo trading is all high frequency, where you're buying and then a split second later you're selling. Now, there are people who do that. There are firms that do that primarily. Now, they have tens of millions or more of infrastructure to do that kind of trading. As a retail trader, which is probably the route you're going, we don't have that infrastructure. We can't do that type of thing. And that's a good thing, because as a retail trader, I'm telling you, stay away from high frequency trading, where you're making hundreds of trades a day. Normally, that is not going to work for most retail traders. The platforms are too slow. There's lag, there's delays, there's all sorts of things that will work against you to try to trade high frequency. I suggest for algo trading a much slower type trading, where maybe you only take a couple trades a day, if that, or a couple trades a week, and you let long-term trends play out. That works for a lot of retail traders as far as algo trading goes. The simple fact is you just can't compete with the high frequency firms and the people who've invested millions upon millions in their trading. So don't even try. Don't even try to do these nanosecond trades and that type of thing. Stick with longer term trading, and that is still algo trading. So, okay, it's not high frequency. What is algo trading? Just think of it this way. Just think of buy rules and sell rules for any instrument. This could be crypto, it could be stocks, it could be futures, it could be Forex, whatever it is out there. You just want rules that tell you when to buy and rules to tell you when to sell or to sell short. That's all algo trading is. You program those rules and then let the computer execute them. And the nice thing about algo trading is they can be historically back tested. You can go back 5, 10, 15 years and have certain rules and see what those rules would have done. Now, the tricky part is just because the rules worked for the last 10 years doesn't mean they're going to work tomorrow for the next 6 months. They might stop working today. And if you build your strategy incorrectly and you do things like curve fitting or over optimizing, which I'll touch on in a little bit, they probably won't work. But it's nice to have that historical test to say, hey, if it's worked the last 10 years, maybe it'll keep working. The other nice thing is it can be automated. Now, if you set automation up correctly, you don't have to be in front of the computer necessarily 24/7. You can check in, you can supervise the algo, and that's actually a rule of the exchanges that you have to show you are supervising it. But the actual trades can be taken in an automated fashion where you don't have to pull the trigger. And that's nice because you can trade multiple strategies all at once. You don't have to be focused on a particular chart like the mini S&P, and then you see an opportunity in gold. Oh, but I haven't analyzed the gold charts. Well, that's what would happen if you were trading discretion in a discretionary manner. But if you're doing algo trading, you can have an algo for gold, an algo for crude oil, an algo for the mini S&P. Have them all running at the same time. and you can automate them all. So it's pretty cool. You just have to have buy and sell rules for each of those markets. So algo trading is just the common word right now, the common term for what we're doing. But back in the day, 20 years ago, people used to call it mechanical trading or systematic trading. A lot of people still call it systematic trading, but it's algo trading. It's the same thing. It's also called rule-based trading. The idea is you have strict programmed rules, and that tells you when to buy and when to sell. That's all algos are. They just determine when you should trade. So think of it like that, and then it's a lot less scary, and it's a lot more approachable and something you can do on your own. You're just putting down rules that tell the computer when to buy and sell. Well, if you'd like more information on algo trading, hit the QR code. It'll take you to Amazon where you can look at my 5 trading books. So here's an example, a real simple example, but it's a pretty good example. So I just compare the close to the average close of the last 5 bars. So think of the average close of the last 5 bars as a 5-bar moving average. So if the close is less than the 5-bar moving average close, you go long. And if it's greater, then you go short. Okay? So that's just a simple example of a retail type algo. Now you can put all sorts of things with it. Stops, targets, you can have different rules, long and short. The sky's the limit on what you can do. I always recommend keeping things simple because that's what tends to work in the future. But you kind of get the idea. You can do a lot of different things here. But that, by itself, those 2 lines, that's an algo. That's a complete algo because it has rules for going long, has rules for going short. And when you go short, of course, you're exiting the longs and vice versa. Pretty easy. So you don't necessarily need a computer even to do algo trading. A trader who calculates moving averages by hand, with a little calculator, that's algo trading. I was doing that before I had a home computer back 30 some years ago. I would actually literally get the prices out of the newspaper for commodities and put them in a calculator and calculate moving averages, and that was giving me my buy and sell rules. So back then, I didn't know it. I was algo trading. I called it systematic trading or mechanical trading, but it's the same thing. So that person's algo trading. You might have heard a lot of hedge funds hire physics PhDs and statisticians and all these like brilliant people, and they're writing all these complicated trading algorithms. They're just algo trading too. So you can have simple things, you can have complicated things, you can have retail traders doing it, you can have professionals who work for hedge funds doing it. They're all just algo trading. So my point here is don't be intimidated by somebody saying algo. Just think of it as rules to trade by. And when you think of it in those terms, then it becomes a lot simpler, okay? It's just rules to trade by. 3 keys to algo trading. 1, you can historically backtest your algo. I think that's important. Why would you want to trade some approach that you've tested and has not worked for the last 10 years? Let's say it's lost money every year for the past 10 years. Why in the world would you think, oh, today it's going to start working and I want to start trading it? You wouldn't. So backtesting, it doesn't prove that it's going to keep working, but at least it allows you to get rid of a lot of the garbage that's out there. Most people never do this. They just assume whatever they're going to start trading, I'm going to use price action with higher highs, and they never test it. They have no idea if it works. So that's where algo trading is a huge benefit, because you can historically test these things. And algos, in their purest form, are rigidly defined, meaning these are the rules. And it's not, oh, well, today's a Tuesday, so I'm going to do something different. I'm going to avoid the rules. Or, hey, there's a Fed announcement today, so I'm going to abandon my rules. I'm going to do the opposite. When you do an algo, everything is rigidly defined, and that's what you should follow. And then finally, the third key with algo trading, because you might say, well, how do I actually do it? How do I automate it? How do I backtest? There's a lot of retail platforms out there that you can test and trade with, and you can do automated trading. So there's a lot of the grunt work, a lot of the foundational work to develop algos, that's already been done for you. And all you have to do is program the algo and test it. Pretty neat. So people might ask, well, hey, is chart trading, where I draw lines and identify support and resistance and inside bars, is that algo trading? Probably not, because you're making decisions based on what you see. Now, if you took those decisions and you put them into rules and you always followed them, then it could be algo trading. But normally, most people who stare at charts all day, they're not algo trading. They're using discretion. They're using their judgment, their intuition, and that's helping them trade. That's not how algo trading is. Okay? Well, what about you hear the news on CNBC, or your neighbor tells you at a party, tells you, hey, invest in this stock. Well, those are all discretionary entries. Okay? So that's not algo trading, but maybe you put a stop loss and a profit target on it, so you have some automated exits. Well, that's kind of half algorithmic, right? And maybe that'll work for you, especially if you're getting tips from your neighbor. You put a stop loss in it, because your neighbor's going to be wrong sometimes, but other times maybe he's not. That would kind of be like a half algo, where you're using your exits as the algo part, but your entries are just all over the place. Okay? Let's talk about advantages and disadvantages of algo trading. First, one great thing about algos, you don't have to rely on somebody else. So I mentioned, your neighbor at the cocktail party telling you to do something. Well, does he know what he's talking about? I don't know. At least with algos, you can test for yourself. You can verify that whatever you're doing, whatever you're proposing on doing, that it works or it doesn't work. You don't have to rely on a guru. So you might see some of my other videos and I say, oh, well, try this. This works. Well, yeah, okay, you can believe me. Or what I really recommend is you test it for yourself. You verify it. And maybe you find something different. But ultimately, at the end of the day, the way to think about this, if you're going to be trading, it's your money. You should have confidence in what you're doing. And the way you should have confidence is by doing it yourself, verifying things for yourself. Don't rely on anyone else to tell you that your rules are good or they're bad. Rely on the data, the test results to tell you that. That's huge. And that's a big advantage of algo trading. The other one is you can automate strategies. You can diversify. You don't have to just be focused on, say, the mini S&P, which a lot of people are. You can trade crude oil and gold and soybeans and coffee and cotton and the British pound. You can be in all those markets, and you can have algos running in all of them, and they can all be automated. And you can just sit back and be the general manager of those strategies, right? You can watch and see when they're making trades and making sure everything's in sync. You can become the boss of those strategies and let the strategies do the buying and selling and the decision making. That's pretty neat. And being diversified is huge for algo trading, because your gold strategy might be going up, but maybe your crude oil is in drawdown, and they kind of balance each other out when they're uncorrelated. Most people don't realize that, but that's a big one. And the last part is when you backtest these algos, you gain confidence. You know that they've performed well the last 10 years. And again, it doesn't mean they're going to keep working. The disclaimer, past performance is not indicative of future results. It definitely holds true. You don't know how long that algo is going to last, or maybe they just got lucky the past 10 years. You don't know that, but at least you give yourself a fighting chance. You say, well, hey, it's worked historically for a long time, therefore I have confidence it's going to keep working. Now, it doesn't always hold up, but it's much, much better than the alternative, which is, hey, this algo's lost money every month of every year for the past 15 years. But I think today's the day it's going to turn around and it's going to start making money. That's crazy. Who would do that? And worse yet, or just as worse, is not testing at all and just thinking whatever you come up with is going to work. No, you want to historically back test it. Give yourself some confidence. That's a big advantage of algo trading. And then finally, if you're used to being a discretionary trader where you can't even get up during the day to go to the bathroom because you got to look at charts all the time, algo trading's different. You don't have to be glued to the screen with algo trading, and that's a big advantage. So let's talk about some disadvantages, because you might sound, wow, this sounds great, I'm going to start doing it. It's not as easy as it sounds, and there are some pretty big disadvantages that you have to know of. One, just because you backtest something and it looks good doesn't mean it is good. You develop a strategy. The trading software and everybody out there tells you, well, you should optimize and you should do this and that. There's a lot of misinformation out there, and it's very easy to just build a strategy that looks good historically, but that's just built wrong. And guess what? Those wrong ones are much, much more likely to fall apart in real time. So you have to watch out for that. You have to know how to develop a strategy. It's not that easy at first. Once you learn it, then it's pretty easy. It's just a step-by-step method, but most people never bother to learn. And they think adding rules and optimizing to death is the way to work, and it's not. Over-optimization is probably the biggest problem along these lines. And it's so easy to do with most trading platforms. You got to watch out for that. So, again, I talked about this a few times. That is an disadvantage of algos. The fact that past performance doesn't guarantee it's going to work going forward. So watch out for that. The way to think about it is backtest success does not equal real-time success. Okay? They might be a little bit correlated, but a lot of times the better the backtest, the worse real-time is. So watch out for that. Third disadvantage, most people just can't get over themselves and can't resist changing, modifying, or tweaking their strategy. they'll see a backtest curve that they create, and they'll hone in on a little bit of drawdown. They'll say, ooh, I should be able to get rid of that. Or they'll look at the performance report and see that one time they lost 5 trades in a row. And they'll say, ooh, I need a rule to prevent that. And they end up changing their strategy, rerunning it. They get a better backtest, but guess what? Real time is going to be worse, because that type of strategy building leads to overfitting, and you don't want to do that. You don't want to unnecessarily tweak your strategy. And luckily, there's some guidelines you can follow to prevent that, but most people do this, and you've got to watch out for it. The fact is, everybody thinks they have these great ideas that are going to work, and oh yeah, I've been looking at charts for 20 years and this works, but when you properly test it, when you put it to the test, most ideas, great or otherwise, fail. I can't tell you how many ideas that people have either sent me or I've read in a book where it looks great and you think this is going to work perfectly, and it doesn't, and it falls apart, and it just doesn't work historically. And it's kind of weird, because you'll read a book and you'll think, well, hey, they wouldn't have published this book if the strategy was bad, and yet they do. And that's why you want to test for yourself, because most things will fail, especially when you include slippage and commission in what you're doing. So talking about the tweaking curse that I mentioned earlier, this is what happens to a lot of backtesters and algo traders. They create a backtest, looks pretty good. They stop it at the blue line. They say, yeah, this looks good. I've spent 2 weeks doing this, and I've made all kinds of modifications. I think this is it. And then they go live, and this kind of thing happens. And they're like, what happened? The backtest looks so good, and real time just fell apart. That happens a lot when you build strategies, algo strategies, incorrectly. Okay? So let's talk about some other facepalm type moments, disadvantages of algos. And you might say, wow, you're telling us more disadvantages to algos. Yeah, that's because I want people to be informed, so you know up front the downside. You might still decide to do it, but at least you know a lot of the disadvantages. Most people can't algo trade when it comes down to it. They override their strategy. They'll think of reasons not to take a trade. And I know, because I've been there. I've seen algos take trades, and I've thought, wow, this is the dumbest trade of all time. Why is it going long here? It clearly should be going short. So a lot of people tend to override their strategy and think they know more. They usually don't. It's really common. Maybe they turn off their strategies too. You've got to watch out for this. A lot of people like to say, well, it's set and forget. This was really popular 5-10 years ago with Forex. They were called Forex advisors, or MT4, MetaTrader 4, MetaTrader 5. There were a lot of people out there selling strategies that just said, hey, you just run this bot, you just run it, you walk away, you come back at the end of the week, and you count your money. That's a total joke. Well, one, the exchanges, at least for futures, say you have to supervise your algo, so you can't just walk away for a week and come back. And things happen. In futures, there's rollovers. With any internet setup, there's going to be outages and disconnects, and there's going to be things that go wrong. You can't just leave it and then come back later. You've got to monitor it, and you've got to supervise it. So most people don't realize that. Now, it doesn't necessarily mean you're spending all your time supervising it, but you've got to do enough that when a trade goes wrong as far as it should have sold and exited and it didn't for some reason, your automation didn't work, you've got to know that happened and step in quickly to prevent further damage. So it's not set and forget. You do need that supervision. The other one, a lot of people out there say, oh, you should algo trade. There's no emotions. I don't know who these people are. Well, I know who these people are. These people are usually just sim traders where there are no emotions. And you can algo trade with sim, not have emotions. And or they're people who never or don't trade with real money. Because when you algo trade with real money, there are emotions. Money is what creates the emotions, not the type of trading. So remember, if you ever hear somebody say, well, I algo trade, it's emotionless. Whatever that person's selling, whatever that person's trying to convince you of, run the other way, because they're not being realistic. I guess somebody like Elon Musk with his billions, he could trade an algo system with one ES contract and he probably wouldn't have any emotions, right? Because it would be such an insignificant part of his wealth. But for most people trading, it's because it's a meaningful part of their total wealth, and then that means money lost or gained is going to be emotional. So just keep that in mind. Okay, so what skills make for a good trader? We've talked about advantages and disadvantages. We know what algo trading is, but can you do it? Can your friends do it? What kind of skills do you need to be a good algo trader? Well, first of all, you need to kind of have a mathematical mind, okay? A lot of people who get into algo trading tend to be engineers, doctors, dentists, accountants, finance people who analyze things, research scientists, those type of people. The people who don't tend to do as well with algo trading tend to be more what we consider right brain thinkers, where they use their emotions and that kind of thing in what they do. So maybe artists or writers, more that type thinking. Now, it doesn't mean that right brain thinkers can't do it, and it doesn't mean that if you're a left brain mathematical thinker that you'll be successful, but it certainly helps if you're kind of along those lines. So if, for example, I had somebody who approached me and wanted to algo trade, and she said, hey, I'm really into astrology and figuring out star patterns, and I think I can use astrology to trade. My recommendation was, yeah, you're probably not going to succeed with that. That's more a kind of right brain type thinking. It's not very analysis based, because astrology is kind of a little strange. The flip side, though, is I have had people I've worked with who've used the phase of the moon to actually dictate some of their trades, and that's a more mathematical approach, and it actually worked for them. So you want a math type mind, first of all. Second, you want to be driven by data, meaning if it's in black and white and it says this moving average crossover strategy does not work, you're going to believe it because you're going to have the data to back it up. You let the data make your decisions. You don't overrule them or ignore what the real answers are. And you might think, well, of course, why wouldn't the data drive my decisions? There are a lot of people out there who can see things and are shown things in black and white and still deny it. So make sure your decisions are driven by data and that will help you be a better trader. And then there's subjective versus objective. Again, this is related to analysis and data. You want hard facts. You want to be driven by the facts, not by your feelings. Another good skill is not to second guess. Remember earlier I mentioned where sometimes my algos have taken trades where I thought, wow, why is it doing this? But I didn't overrule it because I knew that algo had 10 to 15 years of good history. So I said, well, it must know what it's doing. And it doesn't mean it's going to be right, but sticking to what the algo says and not second guessing, that's a skill you must have, because if you tend to overrule your algos, it's basically like not having algos in the first place. So keep that in mind. Frustration. That's a skill. Dealing with frustration, I should say, is a skill for good algo traders, because you're going to get frustrated. You're going to see the market's in an uptrend and you think, oh, it's a good time to go long, and your algo goes short and it loses, and you're going to be frustrated. And you're going to have trouble building strategies because you're going to think, wow, this inside bar method, it's got to work, and you can't get it to work. That gets frustrating. I mean, there are times where I go weeks without building a new algo. That's frustrating. So you have to deal with frustration. And if you can't, if you need to make money every day with your algos, algo trading is probably not for you, because you're going to have drawdowns. So really, any kind of trading is probably not for you if you think you should win every day. Almost nobody does that. Maybe market makers do it, but the average retail trader, you're going to have losing days and you're going to get frustrated. So you have to have the skill or the mental makeup to deal with that. And then the last thing is when market storms occur. We just had one a couple months ago with Trump and the tariff announcements. The market just became super volatile. You've got to be able to trade your plan. And if your plan was maybe, hey, when it gets real volatile, I'm going to turn everything off. Hopefully you did it. But if you said, hey, when everything gets really rough and volatile, I'll continue to trade. Hopefully you did that too. You remained calm and in control even when the market wasn't. That's an important skill. Next, let's talk about some helpful algo trading tips. First, don't live in the past. There are a lot of methods out there that used to work with algo systematic trading that probably don't work anymore. You might have heard of the Donchian method, the turtle method. They used to work. They don't work as good now. Maybe some modifications of them work. But if you see things from 20 years ago, don't expect them to work. Maybe they do. Maybe they don't. Nothing lasts forever. Don't rely on public info. But at the same time, that might be where you get most of your ideas. Magazines, books can give you great ideas. My recommendation is just modify those. Personalize them so you can use them as a starting point, but don't necessarily expect them to work as is, because a lot of people might be seeing the same strategies and trading the same strategies as you. You have to remember, especially nowadays, competition in algo trading is fierce. Anybody with a PC can get some basic software. They can backtest, they can do all this stuff. And especially with futures trading, it's a zero-sum game. For every dollar I win trading gold, somebody else out there is losing $1. Stocks a little bit differently, because if the market goes up, everybody can win except the short sellers. But realize there's a lot of competition for returns out there. There's retail traders, there's professionals. The competition is pretty fierce, and it's getting harder and harder. I would think after 30 years of me doing this, it would be easy. It's not. That's because the competition's gotten tougher. Think about pro sports, for example. Think of the best kickers, place kickers in American football from 30 years ago. They probably wouldn't be that good at all in today's environment because the competition's gotten better, the training's gotten better, the preparation's gotten better. And that holds true with every sport, every position. People are doing things now that 30 years ago they weren't even thinking of doing. Same way with trading. Competition is fierce. People are always out to knock you down. Fourth helpful tip, dedication is necessary. If you don't love this, if you don't get a thrill out of building strategies and then seeing if it works and then running your trading as a business, you're going to fail. You have to have the desire for this. And once you have that desire, you have to constantly aim to improve yourself. There's a cycle that a lot of businesses, especially manufacturing businesses, use. It's called the continuous improvement cycle, where you basically do something and then you execute it and you review what you've done and then you improve and you constantly try to make things better. You make your parts better. You make your processes better. You have to do the same thing with trading. You have to constantly reinvent yourself and try to push yourself to get better. Because if you just remain doing the same things you've done for the past 20 years, you're not going to survive. Another important tip is you have to avoid the sharks out there. And think of it just like that photo. You're the retail trader and the sharks are the professionals. And they're just going to eat you up and spit you out. Or actually just eat you up. They don't have to spit you out. Amateurs, new people coming into trading, they will get gobbled up by the professionals, whether they're funds or other professional retail traders. Fiercely competitive, you're not going to make it as a retail trader unless you avoid sharks and get the knowledge for you to jump into that professional category. So remember that. Another important point, simple still works. So I developed this strategy 13 years ago in the area in white, and it had a pretty good back test. And there's what it's done since the back test came out, the area in green. It was a very simple strategy. I'm not going to share it with you, but trust me, very simple rules. And look at that. It still performed even after I developed it. Simple usually works better than complicated. You don't need to have a bank of computers and tons of servers to help you develop a strategy. You can do that, and some people do succeed with it, but for the most part, simple is the way to go. Simple strategies still work the best. Okay, so with that in mind, let's take a look at a simple crude oil strategy, and I'll give you the rules for it, and you can see how well it's done. And just to give you a sneak peek, I developed this back in 2021, had about 100 trades in it. Not a ton, but it was pretty good, upwards to the right. It had drawdowns, it wasn't a perfect looking back test, which if that's the reason you dismiss it, you might want to rethink your thought process, because usually the better the back test looks, the worse it performs in real time. And then the light blue area was everything since that time up and through February of this year. Looks pretty good. Keeps performing. So I'm going to share this with you. And I always like for simplicity to say if you can write it on a cocktail napkin, then your strategy is that simple. But once you have to start writing books on one strategy, it's probably too complicated. So this one, to go short, I want a long uptrend. You might say, wow, that's kind of counter trend. Yeah. You want a medium downtrend, you want a short uptrend, and you want today to be down. Basically 4 things, and I'll show you an example of those. If those hold true, that's a good time to go short. The opposite would be to go long. I always like, for the most part, like to do symmetrical strategies. Helps prevent curve fitting. So to go long is just the opposite. So I'm going to measure the long-term trend by the 200 bar momentum. That is simply the close today minus the close 200 bars ago. The medium term, I'm going to do 20 bars, and that was when I optimized. The 200 bars I just picked, the 20 bar was optimized. And then the short term I also optimized, and that was 3 bars. So you can see long up, medium down, short up. So I'm saying it's going to trend towards the medium and go back down. And then also today's bar has to be down. So it's starting to move in my direction on the super short term, today's scale, and the medium. Okay, so let's take a look at this. Here's a chart, and this is kind of crazy because you'd say, wow, there was an uptrend, there's a downtrend, but you just look at 2 points, the close now and the close 200 bars ago. That's up, so that's 1. 2, 20 bars ago, it's down, so that's the short or the medium term trend. That's down. 3, the short trend is up, so now we have those 3. And it's hard to see here, but the bar is up again, or I'm sorry, it's down again for that 4th criteria. The open was less than the close today. Or let's go back where it says today down. So it's moving in your favor right there, and then it gets the signal to enter short right there. Okay, so those are the 4 things. And now you could argue, well, hey, maybe you want a different momentum. You know, this chart, this is kind of a weird uptrend because it was up and then it's back down. I get it. But at some point you have to come up with the rules. You're always going to find examples that work or don't work. But this is what I went with. You put it into code. This is TradeStation code. You should be able to read this fairly easily. TradeStation's a pretty simple language. That's what I use. That's what most of my students use. It's an older language, but it does the trick. So close greater than the 200 bar close, the close less than the 20 bar close, which I have assigned as a variable, the close greater than the 10 bar close, and the close is less than the open today, sell short. Vice versa for the line above to buy. And then I say, if I've been in the trade for 10 bars, exit. And that's pretty much it. Okay? You have to remember, though, that when I say sell short, I'm also exiting any long position first and vice versa. So, that exit, just enter according to the rules up here, and then you exit after 10 bars. Okay? And that just keeps you from being in a trade too long. Now, you probably have lots of questions of how I came up with all this. You know, how did I come up with the long-term trend? How did I decide to use momentum? The medium-term trend? You know, there's all kinds of questions here. Why didn't I use a stop loss or profit target? On this strategy I didn't. Other strategies I do. I try to do a lot of different things. The point is, how most people build algos, they decide they want to create the perfect backtest. So they'll take all those questions and try to run tests on them all and run it through all their data. But the truth is, a lot of times it's just easier just to come up with something and maybe do some gentle optimization, but don't optimize every single thing. The problem is most things aren't going to work. But when you have a structured process to develop your algos, that's going to make it so much easier. All right, so that's a simple algo. Let's take a look at some next steps here. How to get started with this. So you've gone from even knowing what an algo was or not knowing. Now you know the advantages and disadvantages. You've seen some helpful tips. You know what kind of skills you need to do it. You've seen a sample algo that's done pretty well. Now you want to decide, well, hey, I want to get started. What do I do next? So first, you've got to decide if it's right for you or not. And I've talked a lot about that, the skills you need, the temperament, that kind of thing. But some simple questions. Do you like programming strategies? Do you like testing and being frustrated when nothing works day after day after day? And do you feel comfortable turning your trading decisions over to a computer? If you've answered yes to all those, okay. If you've answered no to all of them, algo trading's probably not for you, and that's okay. It's not for everybody. Now, if you answered one or two of them, maybe you have to work on some things to get comfortable and to get those no's to yeses. But trust me, spend some time. Think about if you really want to do it. Don't just jump in assuming you're going to like it, because a lot of people don't. That's step one. Step two, you're going to want to do back testing and evaluation. You have to get a trading platform, okay? So I use TradeStation. That's what I recommend. That's what most of my students recommend. We use that. It's not perfect, but there is no perfect platform out there. There's going to be issues no matter what platform you use, and even if you create one yourself from scratch, which would take a long time, or if you use Python and just some of the libraries are out there, there's going to be issues with everything. But the best bet is to get yourself a platform and start using it. And if you decide to get education from somebody, try to align yourself with whatever they're doing. If they use TradeStation, you should probably use it. If they use NinjaTrader, you should probably use that. But you're going to want to know a trading platform, and ideally it's going to be able to test and auto trade whatever you're doing. Okay, so let's talk about retail trading a little bit. Hey, there's a lot of software out that people have gone through the work of doing the math right and doing the programming right to make sure when you back test a strategy you get accurate results. Some of them are free, most are pretty inexpensive. You can share strategies with people. There's a lot of pros to using retail software, but there's also some cons. I always tell people, if you can trick your strategy platform into giving false results that you know are wrong, then you know your platform well enough. Because most people can create bogus backtests and don't even know what they did wrong. So you do have to learn your platform and know what it's doing. And of course, if you happen to pick a platform that goes out of business, well, then you're in trouble. You got to switch. So it's really hard to pick the right platform. One thing I recommend to people, especially from the programming point of view, because you are going to have to program, is get a copy of Technical Analysis of Stocks and Commodities magazine. And usually every issue there's an article where all these different platforms will create code for you in the magazine, or it'll be online. And what I recommend is people just read through the code, and some of the languages you'll be like, what is this? I can't understand it. But likely you'll find one language that you'll be like, oh, there's the buy rule, there's the sell rule. I get this. You want a language you can easily understand even if you've never seen it. That's a great way to learn what platform you should go with. And that's step 3. Once you learn the platform, you've got to learn how to program strategies. Could you hire somebody to program strategies for you? Absolutely. But it's going to cost you a lot, because 9 out of 10 strategies they program for you are going to fail. And you're going to be thinking after a little while, why am I paying this person all this money and all they give me are strategies that fail? That's because that's a programmer. They don't know what's going to work. They're just giving you that. You can use ChatGPT to help you program strategies, but even that, you're still going to have to learn enough, because those AI programs do make mistakes with programming. So my advice, learn your platform, learn how to program in it. That'll set you up for long-term success. And then the 4th thing, you got to learn how to develop strategies. And this, without help, is very difficult, because I'll tell you, this is what most people do. They take their strategy, all their parameters, all their ranges, their rules, they lump it with all their historical data, put it all together, and then run millions of iterations. I'm going to run this back test over the whole weekend. I'm going to get the best parameters, and then I'm going to start trading. That's what most people do. That's wrong. It's really wrong. And I know that from personal experience, because this is what I used to do before I figured out, wow, you need a process that develops good strategies. This develops good back tests. But realize, a good back test is not a good strategy going forward necessarily. It could be, but that's where people get messed up. They think they have to make great back tests, and that's not the case at all. So once you've gotten down some of the basics and you know how to program, learn the correct way, or a correct way, to build strategies. Okay? It's very difficult. That's why I teach a course on it. And I've been teaching this course for 11 years. And I have hundreds of traders who have succeeded building strategies the way I teach, because it is hard. This is my approach. Feel free to copy it. The details are what's really important. The steps are important, and you certainly need all those steps, but it's the details of how you do it that'll make or break you. All right, so let's wrap up here. Algo trading. We've gone from not knowing what algo trading was through advantages, disadvantages, skills, how you can get started, sample algo. We've done a lot in the past hour. Just realize algos don't have to be scary. Retail traders can successfully algo trade. Not easy, but no trading is easy. If you're going to do this, learn a platform, learn how to program in it, learn how to build strategies, and learn how to build them and develop them properly. That is a huge key. All right. Well, if you want more info, just go to my website. You can sign up. You can get a free strategy. And then I will invite you to the free webinars I do. I do an Algo school that's free a couple times a year. You'll learn a whole lot. And you'll also see my teaching style. And maybe you'll decide, hey, this is somebody I want to work with. I want to work with a proven trader who knows how to teach. If you have want to email me questions, Davey, kjtradingsystems.com. So I want to thank you for attending today. Leave a comment. What'd you think of this? Subscribe, hit the like button. Let me know. I do these to help people. Let me know, did it work? And again, if you want to send me questions instead of commenting, there's my email address. All right, I'm Kevin Davey. Thanks for watching. Thanks for sticking through to the end. Have a great day.